Wall Street futures slip as growth fears mount. London European shares fell on Wednesday and Wall Street futures had been in the purple as concerns about weak worldwide boom inside the face of primary bank tightening weighed on markets. The OECD slashed its boom outlook and raised its inflation estimates, although it said there was a restrained danger of stagflation. On Tuesday, the World Bank slashed its worldwide boom forecast by way of almost a third to 2.9% for 2022, caution of a duration of feeble growth and expanded inflation, and U.S. Treasury Secretary Janet Yellen told senators that she expected inflation to stay high. Asian stocks bolstered overnight, with Chinese shares seeing some comfort from easing COVID-19 restrictions, but sentiment was risky and European indexes fell quickly after opening. At 11:13 GMT, the MSCI Global Fairness Index, which tracks shares in 50 countries, became up 0.1%. But Europe's Stoxx 600 turned into down 0.6% on the day, maintaining near a one-week low. It turned into weighed down by means of banks after Credit Suisse warned it turned into likely to see a group-wide loss in the second zone. France's CAC 40 became down 0.7%, at the same time as Germany's DAX became down 0.4%. The gloom regarded set to hold into Wall Street, with Nasdaq futures and S&P 500 MNS each down 0.1% and 0.3% respectively. Analysts said markets were in all likelihood to battle for path, with consciousness on the European Central Bank's meeting on Thursday and U.S. CPI facts on Friday. Grace Peters, EMEA Head of Investment Strategy at JP Morgan NYSE, JPM, Private Bank, stated that there has been a renewed focus on inflation as oil costs remained above $120 and deliver chain issues endured. Markets priced price hikes so aggressively, the customer is getting hammered, she said. Financial situations are already tight and we're at a point in which they could tip over and cause a recession. Investors raised their bets on ECB price hikes, and as European markets opened, cash markets have been pricing in 75 basis points of price hikes by way of September. With the financial institution largely anticipated to begin hikes in July and pass in 25 basis point increments, the pricing implies investors now anticipate its hikes to include an unprecedented 50 basis point move at a single meeting with the aid of September. European government bond yields rose, with the benchmark German 10-year yield up 7 basis points at 1.352%. The 10-year U.S. Treasury yield held simply above 3%, rising once more after it fell on Tuesday, whilst Target Corp NYSE, TGT, said it'd reduce charges, boosting bets that the worst of inflation may be past. The tail is wagging the dog, fees are using equities, stated Guillaume Payot, multi-asset portfolio manager at Aviva, Lawn, AV, Investors. The basics are nonetheless uncertain in terms of the way lengthy is it going to take for inflation to come back down, however in the meanwhile there'll in all likelihood be room for consolidation. The dollar index slipped to 102.35. The Japanese yen hit sparkling 20-year lows as opposed to the dollar and a 7-year low against the euro because of expectations that the European Central Bank tightening coverage will depart the Bank of Japan as an outlier with its extremely easy financial policy. Japan's economy shrank slightly much less than to start with reported in the first area, as non-public consumption remained resilient and agencies rebuilt inventories. German commercial production recovered however rose with the aid of less than expected in April. The euro was up around 0.3% on the day at $1.0734. In the UK, the tempo of residence price increases slowed for a third month in a row in May, and loan lender Halifax said that in addition cooling of call for is likely. In cryptocurrencies, Bitcoin turned into trading around $30,410.